Types of interest-only mortgages.
We have residential interest-only mortgage. A residential interest-only mortgage is a loan that allows you to make interest-only payments for a set period of time.
This type of mortgage can be a good option if you are expecting a large influx of cash in the near future, such as from the sale of another property. It can also help you keep your monthly payments low if you are currently in a tight budget. The downside of an interest-only mortgage is that you will not be building any equity in your home during the interest-only period. We also have the retirement interest-only mortgage. A retirement interest-only mortgage is a type of mortgage specifically designed for people who are retired. It allows you to borrow money against the value of your property, but only requires you to make interest payments each month. This means that the monthly payments are much lower than with a traditional mortgage, making it more affordable for people on a fixed income. There are several advantages to a retirement interest-only mortgage. First, it can free up money each month that can be used for other expenses. This can be a big help if you're on a fixed income and need to be careful with your budget. Second, a retirement interest-only mortgage can help you keep your home if you run into financial difficulties. If you can't make the full monthly payment on a traditional mortgage, you could be at risk of losing your home. With a retirement interest-only mortgage, you don't have to worry about that because you're only required to make the interest payments. Third, a retirement interest-only mortgage can be a good way to inheritance tax. If you die with a traditional mortgage, your heirs will have to pay inheritance tax on the outstanding balance. With a retirement interest-only mortgage, there is no outstanding balance, so your heirs won't have to pay any tax. Also, we have buy-to-let interest-only mortgage. A buy-to-let interest-only mortgage is a mortgage that allows you to purchase a property and rent it out, while only making interest payments on the loan. This can be a great option for investors who are looking to purchase a property and generate income from it, but don't want to have to make monthly principal and interest payments. One of the benefits of a buy-to-let interest-only mortgage is that you can use the rental income to cover the mortgage payments, which can help to maximize your return on investment. Additionally, since you are only making interest payments, your monthly payments will be lower than if you were making principal and interest payments.
However, there are some risks associated with a buy-to-let interest-only mortgage. First, if the property doesn't generate enough rental income to cover the mortgage payments, you could find yourself in a difficult financial situation.
Additionally, since you are not paying down the principal balance of the loan, you will need to be sure that you have a solid plan in place to repay the loan in full at the end of the term. If you are considering a buy-to-let interest-only mortgage, be sure to speak with a mortgage professional to learn more about the pros and cons. Majority of buy-to-let mortgages are based on interest only. Unlike residential purchase for personal use, buy-to-let is strictly an investment. There is little concern of the outstanding loan when the mortgage term ends. Although most lenders will ask for a repayment vehicle, just to give assurance that repayment options are being considered.